Hi, everyone. We've dealt with the requirements of Ind AS 33, earnings per share. We would now like to apply the concepts that we have learned with the help of several questions to test our understanding on this particular standard. We are given this information. On 1st of April 19, there are ordinary shares in issue, which is 25 lakh in number. The 5% convertible debentures of value of 1 lakh rupees. And the terms of conversion suggest that there would be 60 ordinary shares issued for 50 rupees. Now, which means, by the way, for 1 lakh worth of debenture, we should be issuing 1,20,000 shares, right? That's how you read this information. And on 30th of June, which is 3 months later, the holder of 50,000 rupees worth of debt got converted into ordinary shares. We're talking about, of course, 60,000 shares in issue here. Okay. We're also provided that the profit for the year is 5 lakh rupees. All right. The tax rate is given at 30% to us. The question says you are required to calculate the basic EPS and diluted EPS for the year ended 31st of March 2020. Right? There's further information provided that ignore the split of the debt into the liability portion and the equity portion, which is required under, let's say, the financial instruments classification, right? So that is to be ignored altogether. That simplifies our need of the question, right? Now, given this question, what do you need to remember, right? What is the first step that you need to follow? Always pick up. For example, when we start with the calculation of basic EPS, the first point that you want to consider, of course, is profit for the year. You do not expect any changes in this calculation. This 5 lakh would remain as it is for the calculation of the basic EPS. Okay. Now, of course, as far as the number of shares are concerned, there was, as you're aware, that there was a conversion done during the year. So we need to calculate the weighted average number of shares outstanding. Okay. So we are saying that outstanding on 1st of April 2019, which is 25 lakhs, that would be available, throughout the year. And then we're looking at, of course, conversion done on 30th of June 19. Now, what you need to remember here is there was 50,000 worth of debt. 60 shares were issued for every 50 rupee of debt. Okay. So that is resulting into, and we have done this calculation before, that's going to be 60,000 shares. Okay. But then what is the weighted average? What is the factoring of that? We are saying this is available for 9 months out of the 12 months. And that makes a number of 45,000. Okay, so what I was saying now, for the profit that the entity has earned, which is 5 lakh rupees, there are 25 lakh 45,000 shares outstanding. And of course, the basic EPS would simply be 5 lakh divided by 25.45 lakh. Okay, now that number comes at, if we do the calculation, this comes at 0.196 or 19.60 paisa on each share. Okay, that's the first step that we have done. Of course, the requirement is to also calculate the diluted EPS. So what we are saying is calculation of diluted EPS, right? What do you want to now remember here? Whenever you calculate diluted EPS, you again pick the profit as per the basic EPS. And you also pick the number of shares as per the basic EPS, right? We have already identified that. And on each of those items, that is the profit as well as the number of shares, you bring the impact of dilution. Okay. So what I was saying is that, let's write the term profit here and the number of shares. Okay. Let's start with the profit. Let's say profit for the year. which is 5 lakh. Okay. Now, what is the dilution impact we are talking about? We are saying that there is a portion of debt which is not converted for the whole year, right? So we are saying that if that conversion had that conversion taken place, I would not have paid any interest on that amount. Okay. So we are saying that on that 50,000, which I did not convert, I would have saved this interest of 5%. Okay. Which makes my profit increasing by 2,500. But since I paid that interest, I also landed up saving some taxes on that, right? So we're saying less 30% in form of taxes, which makes it, of course, 750. All right. And the same adjustment is also done for the converted portion. You would remember the 50,000 worth of debt was converted, but it was done after 3 months from the start of the year. So for that period of non-conversion, you still would have saved some interest. Okay, so that's simply 3/4 of this value, which is 625, 2,500 divided by 4, and you would say less 30%, which is taxes on this value. Okay, and that would make it, let's say 182 or 183. Let's use the word 183. Okay, now when I total all these amounts, okay, so what I get is 5,02,188 is the value that I'm getting out of this number, right? So when you have got all these, amounts in front of you, we need to look at what is the adjustment that you do to the number of shares as well. So we're saying that the number of shares outstanding as per the weighted average, we had already 25,45,000. We just did this calculation, right? So this amount would be relevant for us. So 25,45,000 number of shares, add conversion if done, right? For that portion of 50,000 into 60 by 50 is the calculation that we want to do for the whole year. That's what you want to remember. And this would be, of course, 60,000 plus, of course, the conversion for 3 months period, that is 50,000 into 60 by 50 into 3 by 12. Now that makes it, of course, 1/4 of the value, which is 15,000. Okay. Now what I was saying here is essentially you look at the total number of shares that comes at 26,20,000, right? So using this information, my diluted EPS will be taken at 502,188 divided by 26,20,000 rupees. Now, if I calculate this, this is coming at rupees 0.191, which is 19 paisa. So it's 19.1 paisa precisely. That's what you are looking at is the value. Now, of course, it's a dilution impact because my basic EPS is higher than the diluted EPS in this case, right? So it can be a question which requires you to do a lot of calculations. So please be very, very comfortable around that concept itself. Okay. Let's have a look at the formal solution. This is what we have done. And that's how, for example, you are looking at the basic EPS is calculated, the number of shares outstanding are calculated. Likewise, adjustment to the profitability is done along with the adjustment to be made to the number of shares outstanding. Okay. And accordingly, you are able to calculate the basic as well as the diluted EPS. All right. Let's have a look at this scenario. It says that on 1st of April, there are shares already in issue to the extent of 5 lakh rupees. The profit for the year ended 31st of March 20, which is 1 lakh rupees. the average fair value of the shares is 16 rupees, right, during that period. A Perfect Limited has already issued 1 lakh options to purchase equal ordinary shares at an exercise price of 12 rupees. Okay, we're required to calculate the dilution impact, calculate the diluted EPS. They're not asking us to calculate, of course, the basic EPS. So what you want to remember here is that whenever you look at an option, okay, whenever you look at an option, we need to measure the equivalent number of shares, right, under the option. So basically, the factor that we want to pick up, right, the factor that we want to use is going to be what is the price at which you should have issued those, which is 16 rupees, but what is the price at which you are issuing those shares is 12 rupees, which essentially means that if there are 1 lakh options, right, and we say number of options is 1 lakh, for example, right? And then if I say the fair value, which is rupees 16 per share, or yeah, that's what we can say. And the exercise price is rupees 12 per share. So essentially you're recovering 75% of the value. Okay. So that means that the number of shares equivalent, right? If you were collecting the money, right, at its fair value, how many shares you would have been able to how much money, you would have collected, and what is the number of shares equivalent? We can simply say that's going to be 1 lakh into 12 by 16, that becomes 75,000. Okay, which suggests that while you are issuing 1 lakh shares, you are only collecting money for 75,000 shares. While you're issuing 1 lakh shares through the options, you're only collecting 75,000 worth of shares because you are giving a discount on the option, which actually means that the free element is the differential number of shares, which is, of course, 25,000. Okay, so that is where you start looking at that these are the number of shares issued for nil consideration, and accordingly you start looking at the dilution impact of this, right? So if I say my profit for the year is, let's say, 1 lakh, I should be using not 5 lakh but 5,25,000, right, for the purposes of calculating the diluted EPS. So we are saying that the diluted EPS should be calculated at my profit for the year, which is 1 lakh, okay, divided by 5,25,000, and when I do this calculation, that gives me approximately 19 paisa per share. Okay, that's a way. All right, you start applying the measurement criteria or the calculations, let's say, for dilution in case of options. Okay, this is where the formal solution is provided to us. We are given that the profit for the year is, of course, 1 lakh rupees, but the dilution impact is 25,000, essentially converting or reducing your earnings per share to 19 paisa, right? Of course, this is something that we have done already. And if we take a step back, this is where you start looking at the number of shares which are practically issued at a nil consideration. Okay, let's have a look at this scenario. It says that you're required to calculate EPS for 3 years, by the way, 2016, 17, 17, 18, and 18, 19. We have provided profit available to ordinary equity shareholders, okay, of Space Limited. We also provided the share outstanding before the right issue is 500. There's a right offer, which is 1 new share for each 5 outstanding shares, which simply means 500 divided by 5, which is 100. Okay. Exercise price is 50 rupee. Date of right issue. Last date to exercise the option is 1st of June. That's what you want to remember here. Okay. The market price of the share, the fair value is basically given at 110. So what are we saying is something worth 110 is issued for 50 rupees under the right offer. The reporting date is 31st of March. Okay. Now, the moment I say I'm looking at this right offer, because there's a right issue in place, we need to calculate the adjustment factor. All right. We need to calculate the adjustment factor for the number of shares prior to right issue, which is this date. What is the equivalent number of shares prior to 1st of June 17? Because after June 17, very clearly, the number of shares are 600, 500 already in place, and 100 through the right offer. Okay. So what is that number of share which is equivalent or adjusted for this 500 is something that we are supposed to calculate. Okay. Now the first step that we have, okay, so for the calculation of the EPS under a right offer, the first step that we do is we say calculation of theoretical X rights price. All right. TERP, right? And how do we calculate that? We say fair value per share multiplied by the number of shares outstanding plus, so that's one aspect, the amount, or let's say the exercise price into number of shares under right issue, right, divided by total number of shares after the right issue. Okay, that's a clear formula that we have discussed, where you calculate the TERP first of all. So what is the fair value given? It is 110. The number of shares are 500, plus you are issuing 100 shares at 50, and the total number of shares would be 600 now. Now this would be, of course, 55,000 plus 5,000 divided by 600. That makes it 100. Now this is the theoretical X rights price. Okay. So we say that the adjustment factor is calculated at the fair value before right issue divided by the theoretical X rights price, which is 110 divided by 100, which is 1.10. Okay. Now what you want to remember here further is that the number of equivalent shares, right, or the equivalent number of shares prior to right offer is the adjustment factor, which is 1.10, multiplied by number of shares outstanding, which is 550. Okay, that is the first adjustment that you do. You calculate the TERP, you assess, you calculate the adjustment factor, and on that basis you calculate, of course, the equivalent number of shares just before the right offer. And that's about it, right? You have done this, and now you simply say, I have 600 shares after right issue, and I have 550 shares before the right offer. Okay, so how difficult is that to calculate the weighted average number of shares, Okay, so let's do that together. Okay, importantly, this date is critical, 1st of June 17, which essentially means that during this year, the adjustment took place, right? Which also means that for this year, my number of shares outstanding are always 600. Okay, and for the previous year, my number of shares for the whole year are 550. But then for 17-18, we are saying that for 2 months, right, my number of shares are, 550. But for the 10 months, my number of shares are 600. Okay, so if you understand this, or if you understand it so far, the job is done. Calculation of EPS is a very straightforward exercise after that. Okay, so what I was saying is, you divide, let's do these numbers. It's 1,10,000, 1,50,000, and 1,80,000. So we're saying that 2016-17, 2017-18, and 2018-19. Profit for the year. Let's look at the numbers again. 110, 150, and 180. 1,10,000, 1,50,000, 1,80,000. So number of shares outstanding, or I would rather say weighted average number of shares outstanding. This is always 550 for the whole year, of course, right? This is always 600 for the year. But then we are saying here that it is 550 for 2 months, and it is 600 for 10 months. Okay, and that is where you can simply calculate this number. So if I look at my EPS, which is the basic EPS, of course, 110 divided by 550, this would be 200, this will be 300, and this number comes at, so 550 into 2 is 1,100, plus 6,000, that is 7,100. So something going to be technical numbers, it's going to be some complex number, but I think I would want to excuse myself from that. So I think we'll just pick it up on the equivalent number of shares, looking at the formal solution. This gives me an approximate number. So this is the same calculation that we have done. So we're getting the EPS of 200 for the first year, 300 for the last year, and 254. So we don't have the exact number of shares calculated, but we can simply say, using that basis, it will really take you back to the calculation. My EPS, or the basic EPS, will be measured at 254. Okay, of course, we just tried to hop into the formal solution. Let's have a look at that as well. It says that calculate the theoretical X rights price, first of all, which is 100 given to us, right? Adjustment factor we have already calculated, which is 1.10. And then we just used that number of shares equal relation of the profit, or the earnings per share for each of the year. Now this would be, let's say, 200, of course, considering the the adjustment factor of the right issue, which is 200 for the 16-17. Since in 2018-19, we already have, there's no change, right? So 600 shares were already in place. So we're looking at 180 by 600. And of course, we make an adjustment during the period. For 2 months, we look at 550 shares outstanding. And for the remaining 10 months, we say it is 600 shares outstanding. And accordingly, we calculate that at 254. All right. That's it from my side. Thank you very much.